All right, so we've got the data out from July, so we're going to be taking a look at that now that we're in August. And I'm going to give you my report as a local real estate broker here on the Central Coast of California on what we might be seeing here for the housing market and what you can do to be best prepared and make the right decisions for yourself if you're buying, selling, or investing here in real estate on the Central Coast. So let's go ahead and get started without further ado. Thanks for joining me, and if it's your first time, please make sure to like and subscribe. And if you are returning, welcome back. Let's go ahead and get started for your August 2023 Real Estate Housing Update Report. All right, so what we're seeing here in San Luis Obispo County is similar to what other markets are seeing as well, which is low inventory that's influenced by the lock-in effect. I've talked about this in previous videos, where a majority of people who hold mortgages that purchased in the last few years or the last 20 years have refinanced at very low rates. So 3.5% to 3% interest rates, and so they've got a great rate on their mortgage monthly payment. And if they're going to sell a house and move into another house, if it's equal value there, maybe moving from a 2-story to 1-story, it can be a bit tricky because of the increase in interest rates is going to increase the total cost of the mortgage. So we've seen that, which has dampened the overall inventory. So just to give you an idea, we're 33% year over year down when it comes to active listings right now. So in July we had 465 active listings, in June 466, and to give you an idea, back in July of 2019 we had just around 1,300. So it really goes to show you that home buyers out there have less houses to choose from, less homes to pick from. And if you're selling a house, finding a replacement property, it can be tricky to identify that replacement property. So you just need to be strategic about it, you need to be mindful, and you need to be well prepared. That's my advice that I'm giving to my clients out there. So total number of sold units last month in July was 207. And we can see here that back in July of 2022, there were 225. And back in July of 2020, 344. So overall, we're down when it comes to sold units here on the Central Coast, which again just goes back to the limited inventory that we're seeing. We're such a high demand area. Very few people want to move out of the area and open up new housing for people. And we do have some new construction, some new development projects, but just not enough to meet the kind of demand that we see here on the Central Coast. So reduction there in active listings and reduction in sold units is what we're continuing to see here in the last couple months, and what I expect into quarter number 4. So again, new listings, it's just reiterating what we've seen, 35% down year over year. And you can see here with this chart, in July we had 222 new listings, and in June 275. And back in July of 2022, we saw 347 new listings reach the market, and in 2021, 425. So you're just seeing here with a chart that the continuation of reduction of new listings reaching the market, which to me means we need to build more houses. However, we're going to get into that in the later part of this video on why we might not be seeing that as soon as we might hope. So make sure to stick around until the end. So what's the next one that we're taking a look at here? Well, let's go ahead and pull up the chart. So days on market is 10. Typically, we're going to see the days on market here for the county being around 20 to 30, which is pretty typical. This is a fairly high demand area, so the days on market here is going to be lower than you might see in other areas, other metro areas. So you might see 45 days in other cities. Typically here you're going to see lower days on market, which indicates overall it's an indicator of demand. So lower days on market means there's fewer homes out there available to choose from, and there's still a high number of buyers. So homes that are out there get picked up quickly, which means if you are a buyer or if you're a seller and you're looking for a replacement property, it's important to act quickly. And that's what I tell my customers, don't wait till the weekend to see a new listing that got brought to the market. Make sure to go see it within the first few days of it coming on the market, and you're going to give yourself the best chance to get an offer in and have it reviewed and hopefully accepted. So days on market, a good indicator of where we're at, relatively low days on market. We're creeping back up. The last couple years it's even been lower, and I think as low as 5 or 6 days on market, which is really low. So we're starting to creep back up, which is an indicator that we might see some more inventory come in here, or at least we're trending towards that direction. So the sales price has pulled back just a little bit when we compare July versus July of 2022, and this is to be expected with higher interest rates. It typically lowers the buying power of buyers out there. And so there needs to be some kind of a flux, supply and demand. It's pretty simple. So we've got a certain number of houses available for sale, a certain number of buyers out there. Well, those buyers are going to have a more difficult time buying a house if the interest rates go up. And we're seeing fairly high interest rates right now. Now, looking back in the 80s and 90s, obviously not nearly as high as the interest rates back then, but still relatively high, and with relatively high prices makes it difficult, especially for first-time home buyers that might not have the equity from a home that they purchased. So that's just something to think about. More struggle for those new first-time home buyers. There are definite ways to get into the real estate market here on the Central Coast, which is, like I said, such a high-demand area. Let's go ahead. That's a great segue into what we're seeing in the rental market as well, kind of talking about those first-time home buyers who might be renters, and also just touch quickly what my advice is for investors out there. We'll get into that with more videos, but let's talk about that. So, for example, in San Luis Obispo, we're seeing on average for a 2-bedroom duplex or house back in January, maybe the price point was around $2,100, about $1,000 to $1,100 per room. Now creeped up to $2,600 just last month, which indicates that with the higher prices, the high mortgage rates, that we're seeing less renters move from being renters into being home buyers. So as we continue to get new waves of people who are, maybe they're moving here to San Luis Obispo for college, or they're moving out of their parents' house, they're not moving immediately into purchasing a home, and oftentimes they'll start out as renters. So with that continued increase of demand for rentals and the increased prices, I see that as a positive sign for real estate investors that are looking at multifamily or apartments. I tend to say, maybe shy away from single-family homes because of the price points that we're seeing now if you are an investor. But if you're looking for investments, maybe look at multifamily, triplex, quadplex, or apartment buildings, and then you're going to get a good return on your investment depending on where you look and what kind of purchase entry price point you make. So just something to think about as we continue to see rental rates increase. It's a good sign for landlords who own real estate and are providing that service of housing. Challenging for first-time home buyers who are moving from being renters into being homeowners. So a couple bits of advice that I recommend for first-time home buyers is, 1, make sure that you've got enough saved up. Save up for your down payment. Number 2, save up for your closing costs. It's important to not put all your eggs in one basket, because there are going to be some repairs that might be needed for your new house. Number 3, make sure to get pre-qualified, pre-approved, and then make sure that some of your criteria, right, you can adjust that for something for your first house. You might not hit the bullseye for your very first house, but understand it might be a stepping stone into your next house. So I encourage, especially here on the Central Coast, maybe taking a look at a home that was built in the 60s or 70s. It might need a little bit of TLC, so you can add some sweat equity. So just one approach. Also looking for properties that might allow an ADU to be built on that, so you get that additional income. Just some thoughts for first-time home buyers out there. So in addition to the high interest rates and relatively low inventory that is describing the housing market right now here in San Luis Obispo County, we're not seeing as many housing projects being built, although there are some, for example, down in Dana Reserve in Napomo, and we've got some in San Luis Obispo and Paso Robles as well. But we're seeing overall builders being discouraged. And I had a conversation with one of my builder developer buddies, and he was talking about how the cost of materials has risen. And we can see here actually in this article how much the materials have risen, which is going to be problematic for new home builders and not encourage them to maybe build, because their profit margins just are not going to be as good or needed to even take on the risk of a building project. So let's take a look here at this one, Construction Dive, and they reiterate it: higher material prices here to stay. More upward pressure on the cost of building products will lead to a permanent shift in prices, according to construction industry sources. And we can see here wood percentage increase in 2023 up 16%, steel up 22%, concrete, masonry 15%, electrical 12%, insulation 11%. So with these higher costs of building materials, and in addition to that, challenge finding good labor here, that is not going to give us an increase of the housing units that we might want. So that's not the best news maybe for somebody who's looking to buy in the next 5 years, but it's good for somebody who owns real estate or looking to own real estate soon, just because there's limited supply, and I don't think there's going to be any major developments built anytime soon here that's going to alleviate that or really make a big dent, especially, like I said, with these higher material costs. All right, so what's my advice? Well, like I said, with buyers, make sure you're pre-approved, make sure that you are flexible in some of your criteria, but still hold on to the criteria that's really important for you. But think outside the box, maybe expand your geographic area that you're looking for if you are on a budget. And then think, maybe buying a house that might need a little bit of TLC, might need a little bit of updating so you get that sweat equity like I mentioned. And if you're sellers, it's a great time to sell. We're still in a seller's market right now because of that low inventory. If you're looking to sell a house and find a replacement property, there are ways to make sure that you've got that process set up. And so I'm working with clients right now. We're working through that right now, and it can be a little tricky, but if you properly prepare, then you can make it happen. But you just want to make sure that whatever team, if you want to reach out to us and we can sit down and help you with that, we'd be happy to sit down and strategize on finding a replacement property and selling your house. But whatever team you're working with, make sure they've got a good plan to help you find that replacement property that you're moving into. So that's the only tricky part. If you are a seller, you're looking to find a replacement property. Low inventory, still relatively high demand. Another thing that we're seeing is a lot of people moving from the Bay Area and Los Angeles, and they're taking advantage of Prop 19. So you're competing with a lot of cash buyers who are taking their cash or their tax basis and they're moving it over. So looking at Prop 19, if you are over 55, that can be a great way to really take advantage of the tax code. Now, of course, consult with an accountant on whether or not you qualify. Great way to lower your costs and move to a beautiful area like the Central Coast and keep your monthly costs relatively low when it comes to your taxes. So other people who are financed are having to compete against cash buyers more here nowadays. That's just something to think about. Make sure that you're pre-approved. Make sure you've got your plan set in place. For investors, I'll get into another video, but overall I'm seeing positive opportunities in multifamily and positive opportunities in industrial. I think so there are some potential opportunities in retail to reimagine those maybe shopping centers, but that is maybe a video for another day. Again, if you have any questions, reach out to me. I'd be happy to answer any questions or discuss what your goals are here on the Central Coast. I've lived here my whole life and lived in multiple cities, so I can give you some insight on that as well. Stay tuned for the next video. Like I said, make sure to like and subscribe, and we'll see you on the next one. Bye and take care.